The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
We're up 11 points today, which is kind of surprising. Earnings not all that exciting from the financial sector. Most of those were lower. Up 11 points. What is probably most interesting is if we continue throughout today, this will be the lightest full day of trading in many, many years. I'm going to have to go back and look, but probably 3 or 4 years. So it's not like there was a lot of juice pushing this market forward. If this is all right, we've got less than 1.6 billion shares as we start the show. So I suspect that we're kind of up and we're pushing ahead of a lot of earnings next week. A lot of this is going to be built in. Guess we can go back to the financial stocks. Where did I have it out here? Let's get this a little bit bigger so I can see it. There they are. In the financials, come on, Mr. Financials. There we go. Taking a quick look out here. COF, which didn't reports off 30, let's call it 1/3%. Goldman Sachs off 9/10, kind of on the back of JP Morgan. JP Morgan off 1%. Bank of America off 1.7%. Citi off a little more than 0.75%. And we've got Wells Fargo off 1.3%. They were mostly off about 2 to 3% on the opening bell. Pretty interesting to see JP Morgan come out with some fairly good numbers, but not really push anything. That goes to my thesis that everything is priced for just about perfection. If you aren't 100% perfect in your earnings, I suspect you could see some pullbacks in that. Kind of surprising to see the market up when most of the stocks that reported didn't do so and have a positive day. But again, when we talk about what's going on out here, it is just the complete lack of volume in everything from ETFs to individual stocks to just about everything. Of course, we had some surprises on the upside and downside. We'll look at those, and we'll talk about some other stuff going on out here. But that's about it to start. Just about no volume at all. But I don't know what else you can say about it other than that. In the meantime, we like to kick the show off with a little bit of history.
And it's all just a little bit of history repeating.
It is history repeating. On this day in 1789, the Parisian revolutionaries and mutinous troops storm and dismantle the Bastille. The peasants come after them with pitchforks, a royal fortress and prison that had come to symbolize the tyranny of Bourbon monarchs. This dramatic action signaled the beginning of the French Revolution, a decade of political turmoil and terror from which King Louis XIV was overthrown, and tens of thousands of people, including the king and his wife, Marie Antoinette, were executed. And that was years later. 1793, I think they were executed. But began the end. And, of course, she famously said, "Let them eat cake." Most people in America have no concept of what that actually means. Back then, they made their bread kind of in a thing that looked like a waffle iron. And any of the excess that kind of squeezed out on the edges that normally you just kind of throw away if you were making a waffle, they called cake. And that's what they said. You could have the scraps, she thought, until she lost her head. You don't lose your head when all about you are losing theirs. But on this day in 1789, and of course, because of the brouhaha over there in France, England thought that they could lean on us. And eventually that turned into the War of 1812 because France wasn't there to help us out again. But on this day, 1789, let them eat cake. And, of course, they didn't cotton to it. Jamie Dimon used the brown word today in his earnings call. He said the United States of America start to focus on policy which is good to all Americans and infrastructure, regulation, taxation, and education. He's tired with the media trying to sensationalize everything and ignore what really truly matters. You guys don't write about it every day. It's completely beyond me. And who cares about fixed income trading in the last 2 weeks of June? I mean, seriously. And, of course, a lot of brown words. You want to know what the brown word is, just think of the S word. I call it the brown word because we're in mixed company, And, of course, earnings today, JP Morgan, Citigroup, Wells Fargo, PNC, and Infosys today. It was the pre-announcements that were probably the big surprise today. We'll look at a couple of those. Of course, Monday, I think we're kind of in a, we're up here at 11 points again with not even 1.6 billion shares in the NYSE consolidated tape. So there is no volume in this market, but we are up 12 points and breaking to new highs, and there is zero volume. So this is a very tricky and nervous market. You've got to watch, and I would be fast on the clicker on that thing we call the mouse. I use a trackball, by the way. But if you want to be quick, I think this is where we might even have this extension on no volume go all the way through mid next week. But again, if we continue to see Netflix, Select Comfort on Monday after the bell not really perform, then we get into Bank of America, Goldman Sachs, Johnson & Johnson, United Health, Lockheed Martin, Harley-Davidson, IBM, United Continental, and CSX on Tuesday. Wednesday, Morgan Stanley, Textron, Qualcomm, American Express, Alcoa, United Rentals, and then the Big Mac Daddy. That's why I think that even with lighter revenues and maybe earnings that miss, we might hold up, and through Wednesday, if they surprise and we start getting stronger earnings, that's going to be different. But we continue to see what we saw this morning, which is good earnings, but well below the ramp up to those earnings. It's going to be the Super Bowl on Thursday with Microsoft, Visa, Skyworks, Intuitive Surgical, eBay Capital One, Athena Health, SAP, Polaris, Snap-on, Checkpoint, BB&T, Abbott Labs, Nucor. Man, we got a mouthful there. But we'll be back. We've got a big announcement today for something I'm doing. We'll talk about that as we return.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We have Ben from Tallahassee on the line, so we're going to go right to him. How you doing today, Ben?
Great, Dave. Thanks. How are you doing?
Another day in paradise.
Yeah, I listened to you about the volume, and it really is unbelievable how light it is today. I noticed that as well. But I also noticed, or I observed, that you do a great job using options as an indicator as well. Anything in the option market that has you steer or bias to more of a topping pattern than a short-term market takeoff?
The option market makers are kind of looking at it about 24.50, so they're very flat. I'm very surprised that we're up 12 points today on this incredibly light volume. But my guess is that everybody is just so euphoric that they want to get in front of earnings next week, and I'm thinking that this could last a few more days. Now, either the earnings are going to come in really good, or we're going to have some big surprises. But right now, the option market makers are thinking that we'll see next week, but they're kind of looking at about 24.50. So there's not a lot of upside and not a lot of downside. They kind of think we go out there kind of sideways. And that's why I kind of positioned myself into commodities, or at least part of my position in the daily about commodities. But normally in sideways markets, you don't want to be short, because they normally just run short squeezes through those. In the ones that are probably most likely. If a stock's got almost no short sales, then it doesn't happen. But we're going to talk about one that popped pretty big today after I get off the line with you. But there's some out here that are really, it's kind of dangerous to be short. I think you got a few days out here. And I would be scared to death to really be long anything that just hasn't been beaten to smithereens.
Yeah, well, I'm kind of neutral, and I'm just trying to figure this market out too. So I don't think that there's
other than going after stocks with massive and monumental and short interests of biblical proportions. I don't think that there's much to be long. If I am long, it's in a option. I don't want a lot of downside risk out here. I've seen markets like this continue to move up a lot longer than you think they can. They do, what age range are you in?
Well, I guess the other thing that I observe is I monitor the VIX quite a bit, and I'm just going off of pure feel. I'm not in front of a computer looking at the exact metrics or data, but it just seems like as much as the VIX dropped in the last week, that the market should have gone up quite a bit higher, based on historical standards. And to me, that might be an indicator as well as, that the delta drop in the VIX versus the delta increase in the market don't seem to be like they historically, have done before. And I don't know if you play around with the VIX much at all either.
Well, you know what this reminds me of? You know what this reminds me of? I don't know if you were trading around 2000.
Oh, yeah, I was.
But the conditions are starting to look to me very much like 2000. And if you remember it, what happened was that they decided to cut the taxes significantly on both trading and long-term holdings. So that if you held, and the stock didn't even change price on January 1st or 2nd, actually, I think the market opened on the 3rd of January. But if you held to the 3rd, that you were going to pay about 15% less on long-term holdings. So there was nobody that wanted to sell. Nobody. And I think we've got kind of the same thing here. We've got all these people thinking that they're going to be all this tax money come in, or expatriated money come back in. And I think we might have a very good chance that we're going to have the same kind of bubble that we had in 2000. And normally, whenever the thing actually happens, like January 3rd, we started seeing the big sell-off. But for 4 months going into from 1999 to the end of 2000, while we had a lot of dot-com stocks, the vast majority of blue chip stocks just kept moving slightly higher because no one wanted to sell because they couldn't think that the stock was going to go down 15, 20%. So that everybody just held, and they held, and they held, and they made this giant bubble that burst. It started to burst on January 3rd that year, and then I think it was late March or April, you got the next top, and then the massive destruction came in. But being up on light volume, this it kind of reminds me of that August and early September, because I started really full-time trading in 98, and I really kind of vaguely remember, I keep notes every day now, but back I kind of vaguely remember this kind of, there was just no volume in a lot of those stocks, but they just kind of kept moving up and kept moving up and kept moving up. Well,
it is a Friday in the summer. I don't know how much credence there is to light trading on that. I guess it does make sense that a lot of the big bankers would go to their vacation houses.
In light trading, you shouldn't see up or down, right?
That's true. Yeah.
Right. So
it gives credence to a little bit of maybe a mix of short squeeze plus the euphoria, right?
I think it's a little bit of short squeeze. We got some people, they kind of pulled the old he's going to get impeached one more time trick. Got everybody short for a few minutes, then ran them all up here to the top. But there's not a lot of short interest in this market. And that's what makes me doubly scared of a downside in this market. Now, it hasn't happened now, but I'll guarantee you I heard every one of the same arguments I heard in the last few months in this push up that I heard in late 1999. And we've got that same kind of thing. There's some kind of government thing that says if you just wait, there's going to be tons of money that's just going to rain down on you. And, the problem is that as soon as everybody sees that, I think we could have the same thing. So we could see the tax bill get passed and signed, and we might find that is some kind of major long-term high if everybody and their dog thinks that that's where the cash is.
Got it. Well, I really appreciate your feedback.
So, yeah, I'm just very cautious out here.
Yeah.
If you're long, I would suggest, like you said, the VIX is at incredibly low levels. Your risk is ridiculously low in calls today or puts.
Yeah, I mean, do you monitor the VIX? I just threw that out because when I monitor that, usually if you look at how much it dropped just in the last week, that was significant. And although the market's been going up each day, that historically just seems like it should have been going up, 150 to 200 every day, based on that kind of drop, and it hasn't. So I don't know.
You've got a couple of things that would make me want to think that we could go up a little bit higher, and that is, for me today, that what gold isn't up $25-$30 is something. Anyway, thanks for the call. We'll come back in a minute. We'll talk about something.
Great job.
We'll talk about something we're going to be doing come the 26th. I've kind of talked about it a little bit. But we'll talk about it for a couple of minutes. Then we'll get into some work charts.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I started in the computer industry probably, I think my first computer-related job was 1980. Actually wrote a bulletin board service, if anybody knows what that is. 1980, 81, I think right in that area. But watching it from the business side, not from the financial or investing side. It was a market that moved at the speed of light. Hard drive companies going in and out of business, Compaq. Every week there was it was as fast as war. There was always something going on. Somebody going in business, someone going out of business, somebody with a new product that wipes somebody else out. There was a lot of moving pieces, and they moved incredibly fast. Of course, it was 1986 before they actually became public companies for the most part, Microsoft, Intel. But what I'm seeing is kind of the next wild, wild west of computing. And then a lot of times, the reason why these things become so both volatile and fast-moving and profitable is there's so many different ways to go. Of course, if you would have talked to somebody in 1980, if they had a word processor or even knew what the word spreadsheet meant, they would probably gone a little bit nutty. Well, what's a spreadsheet business about? Of course, by 1982 or 3, every MBA that came out of any decent college already had a computer, probably a PC, probably some kind of spreadsheet like VisiCalc. And, of course, they were off to the races. But everything moved at lightning speed. Products were, people would make computers and be out of business in 6 months. Hard drives would be a big business, and that company would be out of business in the next year, and you wonder what happened. The field of machine learning, which I don't call artificial intelligence, although some people do, is getting ready to get that fast. But one of the reasons I think it's going to be kind of a wild, wild west going forward is just how many applications there are for this technology. I was doing a little work for this presentation we're going to do on the 26th, and just one flavor, one kind of language of machine learning had 50 different variants in it, and they could be used for a lot of different things. So normally what happens is that and most of the big guys, Amazon, Google, have kind of tailored this kind of stuff to what they do already. But there are as many applications in machine learning in business as there are all the kinds of software that are ready that everybody uses. So we're going to be talking about this. I'm going to do this presentation. It will be in glorious HD and 24-bit color at 1920 by 1080. You'll be able to see everything that I've been working on kind of for the last 2 years as we explain what machine learning is, how it works, and a lot of the other stuff that goes on with it. But who owns the software? Who's gonna make the money out of it? Who's gonna win in the cloud services issue of this? Who actually makes machine learning software? The hardware manufacturers. We've talked about that on this show sometimes. The state of self-driving cars and their machines, and who's actually, or can anyone actually build a truly self-driving car that will drive in all weather? Machine learning chips and smartphones. Good chance that the next version of Apple's iPhone will have a machine learning chip in it, and all the different types. In fact, we'll talk about a little bit more about this with Tom O'Brien at the bottom of the hour in the 3 o'clock. So I just give the let, but you can go to the front page of TFNN and check it out. I haven't done a webinar in a long time because I've been working on this stuff, learning it, and I think I've got probably somewhere in the neighborhood of 400 hours in learning the techniques and applying them. We'll be talking about that for trading in yet another webinar, probably in August or September. But if you're interested in trading these stocks in the near future, any of my subscribers or those people taking a 30-day free trial can do it. Just go to the front page of TFNN. So what else do we have going on here? We were going to talk about some of these stocks that started moving. We had two that pre-announced. It's been kind of a quiet pre-announced session here for, I don't know, a year. There haven't been a lot. CyberArk pre-announced to the downside, was down 10 or 11 bucks at one time, got to a low of $41.32. Kind of the blowout of all blowouts here today. Take a quick look at FireEye, printing around 15 bucks. Not so bad out here. Now, FireEye got kind of a two-gap play going on here. This one may buck the trend, so it'll be interesting to watch this. But we'll keep an eye on it. But it's very kind of interesting out here in that we're kind of, this thing, volume really didn't increase that much. You haven't a lot of short action in it. It's just been going sideways. But maybe since they didn't pre-announce, that's all it takes. On the positive side, we talked about this stock with somebody that called, and we were talking about how this one had massive short interest. I didn't see a lot going into this thing. Yesterday, it did have a lot of volume as it broke the previous high, 8.2 million shares. They pre-announced after the bell last night, and this company's off to the races. Again, big volume and enough, but you'd think maybe there was a little bit more out here with the kind of move that this had on a quiet day with the shorts in it. But 5 million shares already, so plenty of volume out here. But Applied Optoelectronics, AAOI, a clear breakout on volume today, and both of those were pre-announcements. I think the only other one out here was FFIV. This one, you could kind of tell was working its way back in here. Finally did find a level of support today. Again, I've been pointing out how many of these stocks have been coming back to these double gaps. You had a double gap at about 122, got to 120.15, and it bounced right back out of it. That's where support is going to have been. Energy was not all that exciting. Today it is on the way back down from this June 14th high. But I continue to think that this thing actually looks fairly decent after it consolidates. Again, I'm not a big fan of buying these stocks that came down with heavy volume, but this thing did kind of go sideways with a light volume, and other than today, has it. Decent consolidation at 122 if the markets hold up. This may be a buy in a week or two at that 122 level. We'll be back after the short timeout. Remember to go to the front page of TFNN and check out that webinar. No, it's not going to be webinar series presentation. New and coming Wild West in computing. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Going to look at a few more stocks today. Take a quick look at Netflix again and FLX as it goes in. We're going to go to Dan from Brooksville, Florida. How you doing, Dan?
Good, sir. How are you? Thanks for taking my call.
Fantastic.
So I'm in on MRO. I've been in it for a while, just shy. I've got about 1,000 shares, and just wondering what your opinion is of it. I'm down probably close to 10%, and I think I got it somewhere in the $13 range. And I've been collecting it a little bit, just waiting for it to break out. And just wanted to see what you just learn what you're looking at. Just get your opinion.
Well, I didn't see it because I was getting ready for the show. Let me see if I can't Google it real quick. Maybe somebody in the den can post it. But the Baker Hughes rig count for today, did you see what it was?
No.
Okay, maybe they've got it on their website. I just didn't have. I was working on a lot of the things. Didn't have a chance to look at it. I wasn't in any energy stocks. Okay. So what's this say? July 14th. That's got to be today, doesn't it? All day long?
Yep. I know that there seem to be in the oil stocks I do keep an eye on. There does seem to be a little bit of a rally going on in them.
Well, okay. So we're flat here today. It says change from prior count 0. You kind of have to dig back in for what we have. But, of course, we're up 505 rigs from this time last year. In fact, I can just pop this up here real quick so you can see it, and everybody else can too. You can go to the front page, and they publish this. You really need to dig back in and look through this stuff. I tend to do it over the weekend. But if you're trading energy stocks, I suspect one of the things you want to be looking at is that rig count. You're probably close, but I think you're going to need to see a drop in the rig count to see these stocks start moving higher. And the reason is, as long as more supply comes on, it's just not going to help anybody. You know what I'm saying?
Yeah.
I mean, it's a supply and demand business.
Does it look like it's going to be lingering down here for a while then?
Well, I think we were up 7 last week, if I'm not mistaken, if I remember right. So being at least flat this week is a little bit of respite. You may get what you need to get out of this thing Monday and Tuesday. I would like to see some kind of trend where you either saw no growth or negative growth of those rig counts for a while. And that's going to tell you that we've kind of hit some kind of homeostasis level of, price performance. And then generally they can adapt and start getting profits based on whatever the price of oil is at that level, right? As long as it's bouncing around, what is it, 46 something today? What is it, 46.55, up 47 cents on crude.
Yeah, it just keeps bouncing in that little range there. And then it just keeps bouncing in that little range. Then it'll go down 30 cents, then it's up 30 cents, then it's down 40, and then it's up 40.
Yeah, it's just kind of bouncing around out here, and I don't see a lot of juice in it. If we had sideways markets, normally that's very good for commodities. But I would have liked to seen a lot more juice in gold today along with oil. But it seems kind of like maybe crude and oil both today are kind of the go-to ways of putting cash in something over the weekend. Normally it's one or the other. You don't see both up going into Friday. Someone, whatever one starts taking off, that's where everybody wants to go and park their cash in case anything bad happens. Because normally if a war starts or anything else happens bad financially, one of those two is going higher. So it's the natural hedge on a Friday, which is kind of nice. But normally gold's kind of been selling off on Fridays. It's starting to turn up. We've got oil up here a little bit. That's what made me think that at best we were probably going sideways, and made me a little surprised that we're up here today. But the ridiculously light volume, what is it? We got 15 minutes left in this hour. We're just at 1.75 billion shares. This is going to probably be a 2.1 billion share day out here. So, I would say be nervous. You're in the equity, right?
Yes.
That's why I'm kind of thinking that maybe the play to be here is the safe, or at least the safest play if you want to be in something, is an option. At least you have some level of risk defined. Here you have 100%. What are you thinking this thing's going to, 1250?
I'm hoping at least that, and actually I did start off on selling some puts in there and got exercised because I was up near, I had the 14 for a while, and then I had it at the 14 and the 12, and ended up just taking up, I don't remember exactly how much the loss was. I just sold the 12 put so it wouldn't get exercised on me. And then, but it was too late. I'd already gotten the other one.
Yeah. So for energy, I know everybody was kind of looking at the XLE, and it didn't look bad, and you kind of got a bounce out of here, at least a little bounce. But the volume so far is not really confirming all that much. You've had 3 days with lighter volume. You had the kind of a little bit of a pullback on the 12th with 14.8 million shares. Next day you have 10 million shares. Today you got 6.3 million shares. So again, it's kind of dangerous out here. Just set your stop. My guess is that going to wait and see what Netflix's earnings are on Monday. We have John in the den who kind of thinks that maybe there's going to be some deals on Monday coming out of this Sun Valley thing that's going on. Yeah. And maybe that gets everybody in a hot, bothered, and then a lather to buy more stocks come Monday. Maybe that's it. They think maybe this is a little front running of that. Maybe some deal comes out and maybe some volume comes in. But if not, we're going to probably wait and have a light volume day on Monday, waiting for Netflix and then the rest of them. So, I would just say that pick your stop, kind of decide to live with it. And if you don't have any kind of significant movement back here by midweek to the upside, I think you could go back and probably retest the lows of that.
Oh, no.
What's that?
I said, oh, no.
No. I mean, well, does that sound logical or out of the realm of possibility?
It sounds perfectly reasonable.
Okay. I mean, I'm just thinking you've got a market up here. You really don't have any juice in it. You kind of have to watch out on those, and just keep an eye on them. But if you're in a stock that's got light volume on the downside today, you got to be kind of happy. If you're in a stock that went up on light volume, you have to be a little worried. And as the market in the whole, you have to think, okay, we're up 11, 12 points, maybe the lightest day, full day, trading day in many years. So watch out for fireworks come Monday.
Sure, thank you.
You bet.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Tom O'Brien will be up in the next hour. I'll be talking to him about the new wild, wild west in computing at the bottom of the hour for a few minutes. We'll talk about a few things, why I don't like the word AI, and the major types of machine learning, and the lead up to our, or at least my, presentation on machine learning and what you need to know about it as an investor on the 26th of this month. We're going to go to John from Chicago. How you doing today, John?
Oh, I'm doing well. How are you, David?
Another day in paradise, but I'm going to have to watch out here. I'm seeing storm clouds on the horizon here. I may get zapped. We're in the lightning capital of the world here. So.
Uh-oh. Yeah, same here. We're getting some storms.
Yep.
Well, coming at least. Anyway, David, I wanted to get your opinion on the EEM. I'm thinking about shorting the emerging market ETF.
You know what? This thing is nuts, isn't it? I mean, if there was something that probably should be headed down, it's this. The dollar almost always moves counter to this. So this one, with the dollar moving down, doesn't really help any of these exporters. They love the strong dollar, right?
Right.
To ship us stuff. So that it's moving up is very counterintuitive with the dollar getting hammered. So there's something going on in the world that I haven't put together. I think a lot of other people haven't put together. We look at, what probably should have happened in bonds and those kind of giving counter moves to what a lot of people have ideas for in the market. What's the TLT? Right. It's up 23 cents today. So you've got a lot of movement out here. A lot of it doesn't make any sense. And probably the worst thing that doesn't make any sense is the EEM. It looked fairly weak to me. I had a position that was short this for about 1 hour on Tuesday, and I could see I was on the wrong side of it and just got out. But what I can't figure out is why. And if you don't know why, I think Jesse Livermore said it. No prognosis, no profit. I don't know what the problem is in this right now, but you don't have a signal to short it, which is the problem I see. You need something out there that says it's time. You're up on light volume.
Yeah.
But I'm thinking.
Well, that's what I was seeing.
I'm thinking. Yeah, I'm thinking that maybe, well, like I said, if you're going to see these things broach on a big wave, I think this thing could go down a little bit, go up, and then fall apart. And we kind of saw that in the semis. They've kind of recovered, though, from that. But these kind of look like the same thing. There's no signal just quite yet. But maybe by the time we get midweek next week, maybe these things get resolved and these things start coming back to some kind of consensus between all these different things, like foreign markets and our market. Especially these EEM things are probably 80% tied to crude, gold, iron ore, everything, right? So these things are taking off, which would make you think that there's something big happening, or is just everybody front running these, as one person in the den thinks, for Monday, thinking that there's going to be a lot of acquisitions and mergers come out of this hootenanny that they have out in I want to say Sun Valley, right? So maybe we see some. I don't know. It just kind of feels like if there's something that's going to happen, I kind of got the feeling that we're going to be mid next week before it happens. So I don't see any reason to pull the trigger today. Okay. In the meantime, sell when you can, not when you have to, and we will see you Monday, bright and shiny again. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.